Hello, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, February 21st, 2025. Ron Quaranta here with my good friend and co-host David Brill. Our jet-setter co-host Joshua Ashley Clayman is fighting with airlines trying to get to a locale in Asia, which may or may not happen, but she won't be able to join us today. David, good to see you, buddy. As always, let's start off with our usual disclaimers for everyone in the audience, and thank you all for joining us. Obviously, nothing David and I discuss is accounting, investment, legal, token advice. And our opinions really are our own, don't necessarily represent the opinions of our respective firms. David, lots to cover. You and I were in a meeting about an hour ago joking about the fact that we shouldn't even bother putting together an agenda for this session. There's so much to cover. David, do you want to kick it off? I mean, there's been some big news this morning that we need to dive into. What's kind of hit your radar right now?
Well, you know, it's interesting. Last fall, in early winter, we had talked on the podcast about what we thought the regulatory regime would look like under the Trump administration and how we thought some of the cases would be adjudicated. And one of the things we said was that we thought that the Coinbase case would be either settled or the SEC would, remove the case. And in this case, the SEC has decided not to continue with the case and is settling the case without any fees, without any punishment. It's just really pulling the case. And I think this is really good news for the industry, especially on the market structure side, because a lot of us felt that this was an overreach by the SEC, and especially with regards to the fact that the majority of us in the space felt that these tokens, were not securities, and the SEC trying to regulate them was an overreach of their authority. So pulling back from this case today, and it's expected to be signed off by the commissioners, is a big move forward in the market structure of how, tokens should look and how they'll be traded going forward. So I think it's a very positive day for the industry.
David, it's interesting because when I looked at, to be clear, you noted the commissioners need to all sign off on it. And I think there are three standing commissioners at the SEC. So it's not technically official, but Coinbase seems pretty confident. I think many of us had seen Brian Armstrong's video, and it's interesting. I didn't realize they had spent $50 million over the course of time fighting this suit and really kind of dealing with the SEC's perspective on what is or isn't a token. And he really laid it out there that, and I'm just going to paraphrase it again, no reflection on anyone at the committee, that it was kind of pretty dirty politics in his mind about the way that the SEC sort of approached this. Let me ask you this, David. I know you're not a litigator, but I don't recall seeing a settlement with a regulator that, and I could be totally wrong, someone in the audience correct me, where there's zero fees, zero penalty, there's literally just making the case go away. In your mind, does that frequently happen with regulators?
Well, it doesn't frequently happen in the case where the regulators are kind of taking a new look at the laws as they perceive them to be and to be applied. One thing I want to backtrack, though, is, I have in the past for crypto companies negotiated with regulators. And though I'm not a per se litigator, I have worn that hat. And I can tell you that it is very expensive, from burdensome information requests to subpoenas to preparing witnesses and then potentially going to trial and motion practice. It is a very expensive process. So I do think that the industry, does support Coinbase in fighting this fight and appreciates them putting the assets and money to use to fight this. So I think, kudos to Coinbase for that. Yeah. And look, I think a large part of this crypto bars felt, as I did, that, this was an overreach. And, it is a positive sign to see that the new administration and I'm assuming that Paul Atkins is in lockstep with what the SEC is doing right now, is taking a different view and is really working to collaborate with the industry moving forward.
And David, in that context, and you and I and Josh have said this many times, so many of our colleagues in the WSBA and so many colleagues in the crypto space, the cases that are out there that are fraud cases, and again, the regulators need to pursue those. But this is a case. Do you want to elaborate a little bit on the Coinbase case specifically? Do you remember some of the things, might be worth for the audience, some of the things that the SEC had raised?
I mean, at the crux of it, the SEC had said that approximately 10 or 12 tokens. They allege maybe others as well, but they pointed to a number of tokens and alleged that they were securities, and that Coinbase was violating the securities laws by trading unregulated securities on their platform.
Yep.
And at the time, you might recall some of the tokens that they listed were not tokens they had brought actions against. So a lot of people thought it was kind of like a drive-by shooting of some of these token projects, because in court papers they're alleging that these tokens were securities, but meanwhile they had not brought individual action against those token projects. So
Right.
I think the crux of it is that Coinbase was put in a difficult position, because on one hand they were told these tokens you're listing are securities, and then they were asked to come in and register, but it was never clear to register as what and how would that work, because as you may know, securities exchanges can't custody tokens.
Yep.
So if you're registered as a securities exchange, well, you can't custody tokens, then you really can't trade anything.
Yep.
So it really created this I don't want to call it a Sophie's choice, but it really created a scenario where you just couldn't comply, and you were just constantly put in a box that you could never get out of that box.
David, this reminds me of an old conversation certainly you and I and Josh have had, and many in the industry. And I remember very succinctly when the SEC brought suit against Coinbase. And one of the comments in industry, and maybe this is no longer an issue or anything worthy of consideration, tearing up the script, but targeting the exchange, not the issuer. Is that no longer even part of the calculus of what's happening in the space?
Well, I think the calculus now is that we'll focus on the legislative branch and really focus on what does legislation and what does market structure of legislation look like, and who will regulate, crypto assets. And, I think a number of us think that it's going to pivot from the SEC to the CFTC. But I mean, we just need to see that legislation come into action here. Hold on.
David, when you're in New York, it's sirens. When you're in Florida, I can't tell if it's someone drilling or your dog opening a door.
Yeah, it is. We do have some loud, squeaky doors here in Florida, and the dog seems to be going back and forth here. But one of the things that's really important with the market structure is that it will give air cover to companies and institutions who are regulated to get involved in the space by having legislation they can point to and that they can, comply with. So I think removing these litigations are the first step.
Yeah.
And the second step is really working forward a comprehensive market structure bill.
David, thanks so much. If everyone in the audience, again, if you got questions for David or I, please put them in the chat. We're happy to address it. David, I want to wrap up that topic with one thing we've often addressed as well. What does this portend for the other cases that the commission under the previous administration had brought? Will it, what about the Ripple case? There are several others that are still there, again, leaving aside the purported fraudulent cases. Is this a precedent that will enable the SEC to say, dismiss the Ripple case, for example?
I think we should focus on some of the other market structure cases first.
Fair.
So I think if we look at the pause that the SEC has a 60-day pause in the Binance case,
yep,
for the market structure part of the Binance case, and then this case outstanding with Kraken, it would seem that resolution would follow in line with what happened with Coinbase in those two cases as well. So I think that's what we should look for, that this line of argument that these centralized exchanges are selling unregistered securities, that line should move away and it should go away. The Ripple case is different because it's like an individual issuer, and it had to do with the sales of XRP. And so while I think that will go away at some point, it may result in a settlement. Those are different issues than the actual market structure cases.
And again, the different facts and circumstances, and you're absolutely right. It's important to be cognizant of that. David, of course, when you and I look at our trader terminals on the estates this morning, and I did see the announcement or the mention by Coinbase that the SEC planned to dismiss or end the case, I expected, at least a temporary hockey stick for BTC, maybe ETH prices. It's recovered a little bit, but I didn't get that at all. Were you surprised at the market reaction? And it brings me back to what you and I talked about, which is the macro aspect of it. What was your reaction?
Well, I actually thought that we were going to see momentum to pull us past 100 in the next 48 hours.
Yeah.
I think this Bybit hack that occurred this morning, which being widely reported on X for about $1.5 billion worth of ETH
Yep.
from Bybit, has sort of taken the momentum out of this until people sort of figure out what's going on. It's funny, like we can't have good news all the time. It seems like every time we have like one piece of really good news or something, two steps forward, one step back. But ultimately, this is very bullish for the industry and very bullish for the structure of the industry. And so, like, again, I have to see the forest through the trees, but this should give us some positive momentum going forward.
It is interesting, David, because obviously the market took a hit when the Bybit news came out. It was interesting to see, and correct me if I'm wrong, anyone in the audience, I believe they were domiciled in Dubai. They don't do business in the US as far as I understand it, but they immediately, pardon me, put out news that all customer funds and deposits are everyone will be whole. There's no kind of spillover to clients. And it feels like a much more confident series of conversations now, David. I'm just thinking back to the FTX days where the original comments were, no, customers will be made whole and everything's safe. And it was totally not true. Is it a safer landscape globally now for crypto?
Well, I think those two are a little different, Ron, because ultimately FTX wasn't safe because they didn't have the customers' tokens.
Fair point.
But and here Bybit, was acting as business as usual until this morning, and now they're working on taking remediating steps to, either freeze the ETH or prevent it from being transferred. And I think it's going to be a tall task for them. Yeah. Look, I think in this case, it was a very sophisticated hack versus, the financial gymnastics that were going on at FTX. So yeah, I think we have a better handle on some of these things, but the magnitude of this one, if it is true, if it's $1.5 billion, is quite large.
Yeah, and for everyone in the audience, again, when I say is it safer, I certainly don't mean to minimize cybersecurity issues. No. It is astounding how challenging some of the cybersecurity issues and the sophistication, particularly, and I haven't seen this in the news, but particularly, David, with state actors that are kind of leveraging cybersecurity violations.
Yeah, it's a dangerous place from that perspective, and security keeps on evolving, and that's why a lot of exchanges hold very little amount of their total holdings in hot wallets. Yep. But this one looks like they sent a transaction was sent to make it look like it was coming from a Bybit entity to move Ethereum from one wallet to another, and it turns out it was kind of spoofed. Which looks like a new or very unusual tool in the hacker's playbook.
Yeah, and for everyone in the audience, I don't mean to make this a PSA, David, but we talk about this pretty frequently as well. Just have good cybersecurity protocols. Be very careful. There's a lot of bad actors out there, particularly on the edges between the centralized stuff and the decentralized finance world that we're seeing. And there's a lot of work that still needs to happen, David, in DeFi. So when we took it all of that, David, let's segue just a little bit. Let's talk about market action. Again, for everyone in the audience, David gets texts from me and vice versa pretty much daily on, have you seen XYZ? David, I often look at the greed fear index, and I know there are different versions of that in CoinMarketCap and the others. We're pretty solidly below 50, pretty solidly in the fear column for some of this. Does that change your perspectives on price action going forward?
It's actually a good sign, because if you have too much exuberance, then people are levering up and really just trying to, use leverage to get what they perceive as the upside. So I think a healthy amount of fear is not a bad thing. Yeah. I think we're seeing like really a bifurcated market though, where, Bitcoin has gone up substantially. It's consolidating here, but you're still only maybe 10,000 away from an all-time high. Whereas Ethereum, is probably 50% down from an all-time high, maybe 40%. And then a lot of the altcoins, which I think a lot of people own in addition, or either in addition to Bitcoin and Ethereum or just own altcoins, they've really been taken to the woodshed the last couple of months. And I think that part of the ecosystem, it's been a big surprise. I think a lot of people expected to see Bitcoin go up and then a rotation into Ethereum and then a rotation into the altcoins. And right now this cycle isn't providing that. And, I think the last thing I would add is on top of that, you have all this trading on meme coins. Um, and what's happening is, some of that liquidity from the altcoins are getting sucked into the meme coins. And then unfortunately, there have been some unfortunate outcomes with some of the meme coins. So some of that liquidity is getting lost altogether. So it's been a different market. It's been a kind of tougher market than people have been expecting. And
Mhm.
so I think that's why the fear side of things is much lower, is higher than we'd expect.
Interestingly, David, you mentioned the altcoins, and you and I track this data. When you look at some of the altcoins that are out there, high double-digit numbers down percentage-wise in the past 30 days. And I wonder, let's talk about the altcoin meme coin thing, because I always have this fear of meme coins. I get the opportunity and the ability for people to create a token, but I feel like when we look at pump.fun, for example, and I keep bringing this up, and apologies, David, that's concerning to me when I see people having the ability, and bad actors having the ability to spin up a token, kind of rug pull almost in an automated, easy way. Is that part of the fear as well in your mind? What are your thoughts on how some of these memes are operating?
It's interesting. I I think ultimately it comes down to people need to be responsible for their actions.
Agreed.
And if you're buying a meme coin that doesn't seem to have anything behind it, and people are telling you there's no utility, and you're buying it, you're really buying a lottery ticket. And so
Right.
the same way if you buy $10 Powerball, yes, in Powerball, somebody actually gets the prize, but your chances of winning are really, really small.
Yeah.
I think with the meme coins, there's a very finite amount of folks who are really plugged in and do well and see these exponential returns, but the overwhelming majority don't. And so, I do think it would be nice if there was a little more sophistication around how they're dropped and who can drop them and things like
Sure.
that. Ultimately, it's what the market will bear, and if people are still buying meme coins or things that don't have utility, and it may be different if it's a sports team or a figure that you like, but I don't know that you can go in expecting to make money from that. You might want to
No,
buy a little bit for the novelty of it,
sure.
but I think going in expecting to make big returns from it right now just doesn't seem practical.
I'm with you, David. And again, philosophically, I think you and I both agree people should have the right to, if they want to gamble, do it, gamble, but just
Yeah.
be aware of what could possibly happen. I think my biggest concern in the marketplace there is a really big blowout problem, and the spillover to altcoins, the spillover to BTC ETF, and the spillover from a market perspectives. That's the word I'm looking for, David. Market perspectives, particularly in DC. We keep seeing a lot of work happening in DC.
Yeah.
David, you and I and a bunch of members will be in DC talking to regulators and legislators. We're not lobbyists, but there's a lot of voice of industry that's really moving forward in this. So again, for everyone in the audience, just like play it safe. If you're gonna play a lottery ticket or buy a meme coin, do not expect it to turn out you suddenly become a millionaire overnight. But David, a lot of work still needs to happen in
You know,
those aspects of the market.
one thing I want to say, Ron, is that
Yeah,
I do support the idea that people can mint tokens and distribute them and market them, and
sure.
I think it's just a matter of clarity and purpose, and like you said, just a real understanding that unfortunately a lot of these tokens end up going up very quickly and then going back down. But some of them, will do well over time or may do well over time. But it's just, you can't just think, oh, I'm going to buy $1,000 of X and, I'll wait 2 or 3 days and then I'll have 10X. It just doesn't work that way.
And that goes back to your social token idea as well. Look, there will be some folks that issue meme tokens that, pick an affinity, right? Sports people, entertainment people. So that, I think there's a future where that makes sense. I think right now it might be a little dangerous for those people who don't pay attention to the use cases associated with it.
Yeah. Yeah. Look, ultimately there'll be some sort of real shakeout where people will,
Sure.
discriminate against the ones that they think are really just fluff. And there will be some that, like I said, maybe will give you access to a particular talent, or maybe access to tickets for a
Right.
concert before other people, and that has value to it. It
Yep.
just right now it's still we'll just say that it still has some work to do.
Agreed. David, I want to pivot a little bit to the macro conversation. I'm kind of itching to talk a little bit about some of the stuff going on. And David, I think you're having a little bit of a bandwidth problem because you keep phasing in and out a little bit, but hopefully you can still hear me.
I can.
But just looking at the macro picture, and I just want to share some data that certainly you and I track and a lot of colleagues have seen. I think the data from this morning was consumer sentiment came in weaker than expected. The idea that there might be zero interest rate cuts, and again, keeping in mind, crypto is arguably a risk-on asset, and it looks like the pendulum is switching for people, particularly retail people, away from risk-on. They're still being hit with inflation. David, you've talked about that too. Economy kind of break there. People are still having a hard time paying certain things because of inflation. People are having a hard time, David. I was looking at some data. The credit card debt. The average person has over $20,000 in credit card debt at ridiculous rates. So it's forcing people to make these kind of macro decisions about, do I go risk on? And that's not just for crypto, but that's, for equities, for example, and beyond. People aren't buying homes because they can't afford them. David, they can't afford the mortgages even. So David, I don't know what changes that dynamic to get people to be more involved in risk-on assets.
Well, look, I think that the professional investing class, who want some of that exposure in their portfolios will do that.
Right.
I mean, we've talked about, a number of the wirehouses have not, turned on customers yet. And now we're like into month 13 of that. So I do think there's demand that's out there. And you can even see with the Bitcoin ETFs that there's more demand from institutions, and you see the 13F filings. So there is more demand. I think the question is, will we see retail come back? And what does that look like? And it feels like some of retail is like kind of playing in the, meme space, the altcoin space. And, but you're right, though, on a structural level, we do have these issues. And the one thing I will say, Ron, is you're seeing some of it unwind a little bit. And I think the data that we were relying on last year that I think universally people think were inflated or weren't, correct, is now sort of unwinding. And one really interesting piece that I saw was something of like 40% of all the jobs created last year were government jobs.
Yeah, and for everyone in the audience, David sends me the chart of the government jobs being created, and it's an important topic, David. And, you and I have always said it's not just the data; it's the revision. So it really calls to mind what are the true underlying fundamentals of what's happening. And my big fear is inflation, particularly. And I don't think enough people look at this. Maybe we're old enough, David, where you and I pay attention to these things, but look at the price of gold, which is historically a forward indicator of inflation concerns. We're approaching $3,000 all-time high. And to me, that raises the specter of, is the inflation battle not over yet? I know you've got bars of gold overseas, David, and on the yacht, and these aren't concerns for you particularly. But, when you see things like gold, does that make you have the same fears that I have?
I mean, look, Ron, all those gold chains you wore growing up are now worth a ton.
Listen, it was cool in the day, okay?
You never knew. And the bracelets too, and all that. So you're sitting on a fortune there now. Who would have thought? But all kidding aside, it is something we have to be mindful of. And also, when you're talking about housing, I'm really curious to see what happens to housing in DC. I've seen these sort of anecdotes of all these new houses being listed and the housing market having potential shifts. So I think we're going to see some of the fallout from what Doge is doing in some of the numbers.
Fair.
But ultimately, prices are still high. And like even like that whole egg debate that was going on and things like that. But I think prices are still high. Credit card rates are still high. The amounts owed are still high, and delinquencies are still high. So I still think that you have this, the lower and middle income population are really still struggling. And I don't think, and in fairness to the Trump administration, Trump's been in for a month, so I have to give him time, and market forces need to play out. But we still do have an inflation problem. I'm not as concerned about tariffs as other people are with inflation, but I think that's also something hanging over crypto market and risk assets are like, what will the effects of tariffs
Yeah,
be
and
on
agreed.
prices?
And David, it's the two-sided market. You mentioned, the lower and middle income folks who are having those housing problems. You mentioned Washington. That's interesting, but and I agree with you when you look like the new Secretary of Commerce, I think purchased a $30 million mansion. So there's this uneven kind of bifurcation in the market. It'll be interesting to see where it goes. David, we're coming up on only about 4 or 5 minutes. It's got to be a shortened session. Should I bother Josh with getting Starlink on her private jet? Do you think she can kind of like, dial in that way?
Yeah. Josh has to get into the 21st century here, and Starlink's a must. I'm surprised. No, all kidding aside, air travel is
Yeah.
still challenging for all of us. There's so many flights that get canceled and delayed, and it's an unfortunate byproduct. I will tell you that one airline that I fly often ended up giving me, a number of points because the flight was a couple hours late. So they gave me a number of frequent flyer points. I think, just proactively to kind of tamp down any concerns that their frequent flyers have. So not easy.
David, I know that when you're not going private and you do commercial, it's only first class or higher. So let's, you don't particularly worry about reward points on the airlines. David, I want to wrap it up with one thing, and I'm kind of fixated on it lately. I've been spending a lot of time looking at the on-chain metrics, wanted your thoughts on some of it. And one of the things that jumped out to me, I think it was the block or Into the Block, one of those providers, and really worth looking up. We don't have any relationship with them, but good information. I was looking at BTC's network transaction throughput, and it's at the 7-day kind of moving average generally. It's at the lowest levels since February of 2024. Now, it tells me two things, and you and I were talking about it in the virtual green room. It could be either people who are buying, who hold, are holding on and not doing transactions, or that there's simply not volume and liquidity is kind of drying up for the transactions associated with BTC, and that's potentially a drag on prices. Do you see it the same way, or am I misreading that?
Well, I think it could be I think there's still positive inflows in the BTC ETFs. So I still think that there is liquidity coming in, but I think people are just kind of holding right now. I think what you're seeing, we can talk about this more, is that, that we've seen a lot of volatility, and basically anytime one side builds up a big leverage position, whether long or short, the market makers or the whales have come in and wiped them out. So I think you're seeing a little more consistency. But I do think also some people are taking a wait and see. We have all these new committees set up by the government, and will we see a strategic reserve? Will we see a sovereign wealth fund? So I think some people are accumulating, maybe DCAing into Bitcoin and to acquire more. But I think you're just seeing like a little bit of calmness and waiting to see, what actions our government's
Fair
going to
point.
take.
Sidebar, David. How does a nation with $30 trillion in debt and $2 trillion deficits issue or create a sovereign wealth fund? It's kind of making my head explode.
Well, look, Ron, they certainly could hold all the crypto that's been confiscated and not sell it.
Fair.
And that could be the initial fund. So that could be one way they do it. Look, a number of states have, are working through the legislative process to, be able to buy Bitcoin and hold it on their, state balance sheets. And I think it could be a view that they view this as a profitable opportunity for the states and for the federal government. The one thing I'll say, Ron, is, if we were to set up a strategic reserve and buy a meaningful amount of Bitcoin, a lot of other countries would follow suit.
Yeah, great.
And so, so there would be that kind of FOMO effect, we'll call it. So, but what I would say, and I think you'll see it in the 13F filing, is that some countries are buying, and they're buying some sort of quietly. They're not talking about it, but they're accumulating positions. And I suspect we'll keep seeing that, as the months go on. So, I'm still bullish on the industry, and consolidation is good. Up and to the right is sexy and exciting, and everybody gets a little frenzied, but a little consolidation isn't a bad thing. And I still see a lot of green shoots for Bitcoin and crypto this year.
Agree with you, David. I think next week we're going to try to have a guest on. We've got lots more to cover as well. We didn't even touch on Argentina. I'm not sure I even want to touch on Argentina right now. But, when you talk about those green shoots, we're now seeing this resurgence in crypto lending and BTC as collateral. And it'll be interesting to see in a more accommodative environment, but with clear regulatory and investor protection guidelines, how that evolves. There's a lot of opportunity there. David, let's start to wrap it up. We've got a lot going on. For those in the audience, again, thank you so much for joining us. We had a really important webinar earlier this week. It's now publicly available. David, if I could share kind of the IRS, perspectives on IRS and how it impacts digital assets. Our friends Nick Farr over at Forbes Mazars and Jessalyn Dean at Eligible. Shout out to both. Their firms are members. There's really great deep insight now lives on our YouTube channel. Important considerations, David. I mean, you're generally a buy and hold guy, but some of the folks that are selling are going to have different tax reporting issues to deal with. We'll be in Washington later in March as well. But David, I will share with you the most text messages and Slack messages I get are, when are you giving David his steak dinner? When do you come back to New York, buddy? I got to get this off my conscience.
Yes, we're going to make this happen in March. We're going to pick a day and we're going to make it happen. But I'm much looking forward to it. And I'll tell you, Ron, I've had a couple of good steak dinners this month. So,
I know.
The bar keeps getting higher as far as, what the right place is. But I think we've still landed on Porterhouse as the place. So
I know, because you keep telling me about them every time you go, David. But I'm looking forward to it, buddy. It's long overdue. Let's leave it there for everyone who joined us. Thank you all so much. If you've got additional questions for David or I, Josh should be back next week. Drop us an email, info@wsba.co. David, have a good weekend, buddy. Thank you, everyone, for joining us. See you next time.
Great. Take care, everyone.